Hi everyone, Andy Cruz here in Business Development, and welcome to your weekly video newsletter. This week's video is titled Forbearance May Not Be Your Friend, and we're going to unpack this a little bit to look at some of the future-pacing consequences of forbearance. But before we do that, I have to come out front and disclaim that if you are in a position where your only option right now is forbearance due to loss of job, decreased hours, furlough, or or being self-employed, or any of those reasons connected to the COVID crisis, forbearance may be your only option, and we understand that. So please understand that if you are in a situation where you literally don't have another choice, we totally understand that. For those of you who are watching this and are considering forbearance, this is who we're talking to today. We've learned a lot over the last week, and even in just the last few days, about what some of the forbearance unintended consequences are and some of the future problems we might be seeing down the line. And today I'm going to share some of those with you. So if you're interested in what to do if you need forbearance, you can watch our last week video or a number of Monday Mortgage Minutes where I talked about that. But this video is to talk about some of the unintended consequences of forbearance and what you might be looking at from what we know now if you have to file forbearance and then later want to purchase a home or refinance. So let's talk about those things right now. So the first thing on my list here to talk to you guys about is an attestation. An attestation is you making a statement of truth. And so the attestation of forbearance is something we're starting to see either in like a form or even a disclosure for people who want to refinance a house right now. And what they're being asked to do is to attest that they have not applied for forbearance. That does not mean got forbearance. That means you have not applied for forbearance. And we're starting to see multiple companies come out with some sort of form or disclosure that is asking borrowers who want to refinance to sign this form that they attest they have not applied for a forbearance. So keep that in mind. Those of you who are considering forbearance and down the line want to refinance, consider that point. The next thing is that today I was on an industry forum and we were exchanging with someone who is a loan officer in another part of the country, saying that they had a client come in this week already, apply for a refinance, and the forbearance was on their credit. So even though the headline and the article, the news story says, you know, credit bureaus and servicers aren't supposed to be reporting the forbearance, well, they're not reporting the late payments, which is a 30, 60, or 90-day late, but the word forbearance is still being used in the comments box of the said credit report in this instance. So the borrower was trying to get a refinance because the rate is lower now than it was 2 weeks ago, but they were already into a forbearance plan and it was actually on their credit. So now let's talk about forbearance that's not on your credit but is on your payoff demand. This is another story that came up today in the industry forum I was in, and it was a situation where a person was looking to refinance, but the credit report didn't show forbearance. But when their payoff statement came in, the payoff statement said, here's the principal amount of the balance of the loan that's due, this is the interest that's due for this month, and it had another line item that said unpaid forbearance. And so even though the credit report didn't reflect forbearance, the payoff statement was reflecting a forbearance. Now, those of you who don't know, a payoff statement is what we request in the underwriting and the loan processing part of your loan, where we have to pay off the loan you currently have in order to secure the new loan that you've applied for. And so when that payoff demand comes in, it has a line item of all the amounts that are owed for the various things connected to your loan balance. So the balance itself, the interest, escrows, and in this case, forbearance was listed, and that killed the deal. The other thing is that we currently have a set of wait periods, which is called seasoning, where if you had a previous forbearance, there's a specified amount of time you have to wait before you can qualify to get a conventional loan, qualify to get a FHA loan. So there's these wait periods, depending on what type of loan you're trying to get, there's these wait periods that you have to, by default, wait that extent of time before you can get the refinance you want or the purchase you want. So let's say you have a forbearance in 2020. and then you want to refinance in 2021. Well, you may not have had enough time pass before you're even allowed to refinance based on the current forbearance rule set. Now, the other thing that is also unknown about this is that with the vast amount of change that's happened because of the stimulus package and this new policy, is whether or not those are going to be extended or contracted, and if there will be a new forbearance that's specifically connected to COVID or this stimulus package that was passed. So that is unknown, and that right now is one of the biggest questions that's floating around is, if someone does forbearance now, will they be subject to the current wait time rules, or are we going to have a new set of wait time rules because of these forbearances being part of a policy that was passed? So that is just one of those looming, hanging out in the air things that you just don't know the answer to yet. But it's something we're going to have to watch. So those of you who are able to continue making your mortgage payment, we are advocating that you make that payment. It is to your advantage to keep making that payment. It is right now to your disadvantage if you're able to pay and you choose not to. If you were to be asked to forget that the policy passed and you just stop making your payment, you know what that means. If you just stop making your payment right now, there's consequences to that. So there's still those consequences, even though we're being told over here that we're going to allow this forbearance. It's not forgiveness. It doesn't mean you just get away scot-free and that money is never owed. And the biggest thing that we're seeing volatility and differences for right now is, depending on who your mortgage servicer is, the person you make your monthly payment to, depending on who that is, the way they're treating their forbearance requests is differing. Some are going to have balloon payments after 30, 60, or 90 days, and you're going to owe all that at once. Some are going to tack on the amount you owe to the end of the loan. Some, in other circumstances, may choose to restructure your loan or do a loan modification, but that then requires a whole different set of processes and documentation to get your loan restructured. So there's none of this that right now is really in your favor unless you absolutely cannot make your mortgage payment. So like I said at the front end of this, if you're in that situation, we totally understand. And if this is your last resort, you have to take the forbearance. We get it. But if you are able to make your loan payment and you simply aren't, these are some of the consequences that are known and some that are unknown of how that might affect you negatively down the road. If you have any questions, you can call or email us. We'd be happy to answer, and we'll continue to update you guys as we get new information on how this is unfolding and what new rules and policies are coming to the forefront for those of you who are looking to refinance in the future. Thanks for watching.